Hello everyone, welcome back to the channel Mastering Options Trading. Let's quickly review what we expected from the market and how did the market behave on Tuesday, right? So clearly I mentioned that the pre-market analysis participants data and charts are looking bearish. So I mentioned that I would immediately go long after if it opens a big gap down, right? Because of the mean reversion, market will bounce upside sharply. So what exactly happened is market opened somewhere around this level and it immediately bounced around 70, 80 points, so I could capture that. Now, why did I book profits and why did I not wait for further? Initial thought was 22,250 could be the target. That was the thought in my mind. But if you see, two, three times it made wicks but could not cross. So either it could break out or break down. So somewhere around this point, I felt it is kind of safe to exit longs, right, for temporarily. So, and then what happened is ideally it should have broken out on upside, but it came down, formed a beautiful hammer, and again market went up, right? And I mentioned that, yeah. So clearly, if you see before market only, I mentioned that bounce is possible. Now, before we jump on to the analysis for tomorrow, one important thing, as you have seen my videos, right? There was an open challenge which I took roughly around 7 trading days ago, right? So this is the video. If you have missed to watch, you can watch out here. So clearly in that video, I mentioned that Nifty target would be 29, 22,199 and below. Yesterday it was achieved, and even on the simulation, if you remember, so I mentioned a strategy where for every 100 points up move, we can add call shots, and that would lead to profitability, right? So clearly, if you see this particular challenge, so it was on a capital of 1.5 lakh as a sample. I just took one lot. So although I traded in, I mean, much bigger quantities. So if you even took this particular trade for 1,56,000 capital, one would have got a return of 15,000, which is close to 9.7 or 10%, right? So that's the importance of understanding the markets and taking the positions in the right manner, right? I took positions of May. The logic I want to explain here, if you see the monthly candle was actually three dojis were formed. So somewhere I thought a bigger candle is possible, and not only that, it was kind of deviating from the moving averages, the exponential moving averages. So I felt that it is going quite far away from this. Even if it goes around 23,000 as well, it should fall. That was the clarity that I had because of the main reversion, right? And it exactly, maybe it took 6 or 7 trading days, but it did not happen the exact week that I told. But I clearly mentioned that the target is for April end, right, which is 25th of April. It happened before, way before that itself, right? And it actually gave an excellent profits. Only thing is, somewhere I started taking positions from 22,525 itself. After that, market went up by 240, 250 points, but that did not bother because the strategy it itself is very good, wherein no matter how much up it goes, eventually it has to come down. And the premiums were also attractive on calls, so I shorted. I hope I'll get 100 likes for keeping up the challenge and keeping up the transparency and showing you exactly how to earn money, right? And in case you want to know more about mean reversion, etc., you can join the next webinar that paid webinar that I would be running once a month, right? So all this is possible thanks to the mean reversion techniques that I have designed for myself, right? Hope to get 100 likes, and please do comment your opinion on how you felt at that time market would not fall at all, but eventually in quick time, right, within 3 days, 3 4 days, if you see market literally fell more than 700 points, right? I hope you enjoyed the analysis as well, right? Okay, now let's quickly jump on to the analysis for tomorrow. Starting with the data, not sure. Retailers were 3,000 longs in index futures. Suddenly they have moved to 81,000 longs within 2 days. Retailers seem to be getting extraordinarily bullish. So I can tell you one thing looking at this data. Maybe for a day or two, market can go up, but again, one more fall is pending. Just looking at the index future longs, right? FIIs have moved from plus 33 to minus 36, meaning longs from 33,000 to shorts of 36,000. So they have also switched close to 70,000 contracts from long to short, right? And pros data we can ignore for now. So clearly retailers are bullish and FIIs are bearish. So we take that as a clear bearish sign looking at the index futures for a short term view. Index calls, retailers had huge call longs. They have now moved to call shorts. So it is bullish for tomorrow. FIIs moved from call shorts to call longs. So bullish for tomorrow. Pros have reduced their call shorts. So bullish for tomorrow. So clearly from call side, it is indicating bullishness. Put side, again, retailers have fearlessly gone with more put shorts. So that is bearish. FIIs have added huge put longs. So bearish. Pros have somewhat like very minor quantity reduced in put longs, but still it is net quantities. So put side is indicating bearishness. So call side bullishness, put side is bearishness. So what we can expect from this data is one down move is possible, and if that comes, then again after that market will take a U-turn and go upside. That is in line with my other analysis as well, that in case market opens gap down or goes close to 22,000 kind of levels, right? So that would act as a strong support. Look for a bullish engulfing or a bullish harami or an excellent hammer candle that we saw, right? Something like that. And then on a 15-minute start, and then the bullish positions can be initiated for 1 or 2 days only, right? So I would look for a reversal candle and then play for the upside tomorrow. And if you see the daily chart, it has actually taken a support near 50 exponential moving average as well. So tomorrow it might break, but ultimately I think it will close above that moving average as well, right? So, and PCR, one important thing, I think I don't have it here, but PCR looks to be close to oversold, not at oversold. So another 150 points down move is possible, but there it becomes very attractive for an up move. But again, Thursday is an expiry day, so PCR is not of that much importance because on expiry days it can violate the rules. So yeah, but at somewhere around I'll show you the levels for Nifty. So the key levels are 22,080 will act as the first support, and next support is at 21,992, right? So somewhere around the next level we can take. I would prefer to go long on Nifty. For Bank Nifty, similarly 47,317 will be the first support and 47,000 will be the next support. Here as well, it has fallen close to 1700 points from the high. So yeah, just to summarize, data actually is bullish only for 1 or 2 days. So any gap down or a down move, and then some bullish pattern on 15 minutes chart, then good to go with the longs. I would prefer that. And after like 3 or 4 trading days, very likely the market can fall again. But we will go day by day. For tomorrow, this is the plan. A double-sided momentum is possible. If you're liking the content and finding it insightful, please do like, share, and definitely comment on this video. Thank you all. Have a good day.